All right, folks, thank you for joining us here today. I appreciate your time as always. Most importantly, though, I want to thank you for attending this presentation, but most importantly, I want to thank you for your trust. The individual before me here had some great information. I was learning a lot from that as well. But today I'm going to be focusing here on an opportunity to develop the key skills, the skills that it's going to take to become a professional Forex trader. And I'm talking about foreign currencies here. Who in here has dabbled in the market, whether it be practice account or has a live account, trading foreign currencies? If that's you, type in the word me so that we can go ahead and see exactly what type of traders we have here in the room. If that's you, type in the word me, and I appreciate the feedback here. Feel free to exercise this chat room whenever you like. I see your responses. I think Reed sees them as well. But at the end of the day, what I'm here to do, folks, is just help you understand how I teach traders with our organization how to trade these markets, how to trade it correctly, safely, and consistently with profits being generated. Because there are rule followers and there are rule breakers. If you have been a rule breaker in the past, it's hard to break that habit. What we do here at MTI is we help traders distinguish what type of trader they are, whether they're a long-term position trader, short-term trader, but most importantly, we help traders find consistency in three major market skills. That is, first and foremost, what direction the market's going in. We all need to know what direction the market's going in to even have any bit of confidence in our strategy or technique or methodology. That's step number one. Step number two is where and why to get in the market. Because if you don't know where the where or the why is as far as you getting into a trade, it's only a matter of time before, if you're getting lucky trading these markets, it's only a matter of time before your luck runs out, right? I mean, let's just be honest. And then number three is where and why to get out for profit or for safety, because this market, folks, can only move three ways: up, down, or sideways. And at the end of the day, don't you want to know how to capitalize on all three of those movements and how to generate generational wealth for you and your families through those three movements? Allow me here to be the bearer of good news, as MTI has been here in business for well over 20 years now, and what we've done is we've helped traders achieve excellence. We've helped traders achieve a roadmap of success that, for whatever reason, they didn't have before or thought they could not achieve before. Now, what I'd like to do here, folks, is let you know that what I'll be sharing with you today is what our clients learn once they come on board and become students of MTI. Now, I'll provide you a link here in the room, and when you receive this link, ladies and gentlemen, go ahead and type in a Y or a yes that you do, in fact, have that link. Did everybody receive that? I just sent it out to everybody. Okay, go ahead and copy that or hang on to that link, because at 7 o'clock tonight Eastern Time, 7 p.m., we're going to be hosting a live free presentation where all you have to do, if you want to learn more after I go ahead and instruct you here, if you want to learn more, we will be going in depth for right around 90 minutes for a presentation to help you understand what our students go through, what kind of infrastructure we offer, the support, the lifetime mentorship, the lifetime access to the education. It's fantastic. So definitely do yourself a favor, sign up for that. It's free of charge, and enjoy the presentation. Most importantly, enjoy it, benefit from it, and then make an educated decision you and your family will indeed make, if that's something your future is going to be calling upon for you to take advantage of. Now, before I go into the market and talk about technical analysis and talk about how I trade and teach people how to trade, if I go, for whatever reason, a little bit too advanced for some of you here, and I only say that because I want to make sure that if there's somebody who's never seen charts before in their lives, that they know I don't expect you to learn everything in the next 45 minutes. That's not fair to you as a student. That's not fair to me as your instructor. But what I do want you to know is that when you do learn how to trade, when you have that tipping point, you have that aha moment, that purpose, that clarity, you're going to know that if you want to sail these markets, you always need new wind. You're going to always add fuel to your fire. Add that wood. Keep it burning, because more is a positive thing. Wealthy traders, believe it or not, wealthy traders want to get wealthier. Not because they're greedy, but because they're smart. Abundancy is what survives crashes, folks. And what I'd like to do right now is help you understand that what separates the people in these markets, no matter what market you trade, but I'm talking primarily Forex, what separates the people that have versus the people that don't have is the people that have, they want freedom. They want financial freedom. They don't want comfort. Comfort doesn't pay bills. Comfort doesn't take care of your future. Freedom, financial freedom does. And that's what we help to have our traders strive towards, is excellence. Again, my name is Jose Tormos. I've been here with MTI for going on now almost 10 years. As a Forex trader, as an instructor, I've done it all. I love this organization. I love its clients. I love everyone who goes ahead and has that one moment of clarity where all of a sudden they stop learning and start doing because they've made that transition, and it's just a fantastic opportunity here to take your financial portfolio to another level. But as I start talking about this, let's go live to the market here and talk about a currency pair. This currency pair here is one of the global 7 pairs that our traders look at. It's called the Great British Pound versus the US dollar. And as we look at this, we want to find out how can we make a profit from these charts? How can we make a profit from this market? I remember when I was about 13, 14 years old, my uncle was opening up some charts on his computer saying, look, I can sit here, place a couple of trades, make a lot of money all day long. I didn't know what, now he was trading stocks at the time, but I didn't know what I was looking at. I was looking at charts, but I said, how do you make money off of this? That sounds fantastic, right? What you'll learn today is that a chart is a chart is a chart. No matter where, across the board, when I teach you a couple of strategies here today, you're going to find out that when you watch CNN, when you watch Bloomberg Television, when you watch all those financial programs, and they show you diagrams or charts and tell you what they think the market's going to do, you'll know what the market's going to do because you're trained by the best in the business. Now, this currency here, I've got a weekly time frame which displays candlestick formations on the chart for every week. For every week, this market forms a formation, or the sign language of the market. And then I've got a daily chart right below that because our eyes move from left to right, up and down, right? That's just when we watch movie theaters, we will look left to right. When we read, we go left to right. On a daily time frame, that's not 1 week per candle, but 1 day per candle, okay? Then I'm going to show you the 240 chart, which is a 4-hour time frame, meaning for every 4 hours the market passes, a candle is born and closes. And then a 60-minute or an hour, meaning for every hour the market forms a candlestick formation. These are the sign languages of the market. Now, why do I want to show you 4 different time frames? Well, it's to help you understand how traders make money in this market and how the larger time frames will provide you easy, simplistic analysis to give you the overall direction, and then you can use it as a map to help you trade setups with equity management, as we say, or setups that you can afford on smaller time frames. So think of it this way. The weekly, consider it the grandparents. Look at it that way. The grandparents control the daily, the parents. Then the parents control the 240, which are the kids, and then the kids control the 60, which are the toys. Think of it that way. Grandparents control the parents, parents control the kids control the toys. Meaning the larger time frame will dictate the movement. Then it's time for us to find out how to trade that as the markets get smaller. Now, I'm going to open up my weekly time frame because what this is doing is showing me the history of this market each and every week via every candlestick formation that has appeared. Now, would you agree, ladies and gentlemen, that by looking at this chart, if I was to tell you that this market here appears to be going sideways, would you say that that's pretty accurate, that this market seems to be bouncing off of this blue line here and then bouncing off this blue line, then bouncing off this blue line, bouncing off the blue line, bouncing off the blue line, and then bouncing off the blue line again? Would you agree that seems pretty fair and accurate as far as what this market's done on this currency pair ever since 2008? Now, again, if I go a little bit too fast for you guys, just remember that we have a web presentation tonight that's going to break this down to almost kindergarten status, to the point where it makes it easier to understand, easier to execute, and easier to obey for all of you. So just let it sink in. I just want you to watch and relax. I don't want you to think too hard. Just enjoy yourself. And if you have questions, write those questions down, because those are going to be fantastic questions for the host of the presentation tonight at 7 p.m. I would be doing that presentation myself with you, but I've got another presentation with our clients that when you do become clients of MTI, you will also be with me, who also trades live, and I will show you opportunities in the market just like that every single day. But these levels where the market has been U-turning here is what we like to call resistance, okay? They are resistance levels. Now, what I also want you to pay attention to, folks, is the charting software that I'm using. The bottom line here is called support. Does everybody see how I have ease of access to write and type on my charts and do circles and lines and all sorts of goodies like that? How many of you are using currently free charts off of a practice account or maybe even a live account? You get the free charts that you're using, but they're just not robust. They're just not. They're not doing all that you can be doing, right? One of the things I want you also to remember, if you want to write this down, is that all of you who join the presentation tonight at 7 p.m. via that link that I gave you, you'll be in a free web presentation. Now, these charts that I'm using right now, just so you know, they go for $199 per month as a subscription. They're professional charts. They create professional results. But all of our students, all of you who will end up becoming students of MTI, don't have to pay $199 for these charts. You get these charts absolutely free for the first 365 days of your career. I mean, that is just a fantastic, fantastic value right there off the bat as our students become clients. But now that we've talked about that, let's go ahead and show you how to trade these markets. It's very simple. When you identify the market going sideways from resistance to support, all you have to do is when the market touches the blue line up top, you look to sell. Okay? When it U-turns off the bottom, you look to buy. Okay? Same thing when it U-turns off the top, you look to sell. When it U-turns again at the bottom, you look to buy. Now that it has U-turned at the top once again, what do you think we should be doing with this currency right now? What do you guys think we should be doing? We should start to look to sell, right? We should start to look to have the market go bearish. Down movement means bearish or selling. Up movement means bullish or buying. Now, another key way to identify if this market truly is heading down, besides what we've just seen over the course of time, is by drawing what we call trend lines. Okay? As the market goes sideways, and I don't want to go ahead and confuse everybody by giving you too many words on the screen here. Let me delete everything so that we can keep it clean. But as this market goes from the support to resistance, we draw what's called trend lines like this. As long as the market stays above that line, you can continue your buying strategies. When it breaks it, well, we have what's called the trend is your friend until it bends, and then we'll look for selling opportunities. When that happens, you now draw your new downtrend lines across those candles and sell all the strategies you can until it reaches that line. And when it U-turns and breaks it here, we once again have the confirmation to buy the market, place our uptrend lines again, and look how the markets are accurate. They are painting a picture. As long as they stay above your trend lines, it'll go in that direction. Once it breaks it, it'll test it and continue to fall. Does everybody see how accurate that is? Over and over and over again through the course of time. Okay? As this market came back up here again, you could have drawn that trend line that we'll teach you. And look how this market breaks that trend line. Would you agree that this market ended up breaking the line up here? Trend is your friend until it bends, right? And look what it's done. That is the first red flag that this opportunity to buy the markets is over and the reversal has begun. So what do we do now to ensure that we are truly going down to where we anticipate the market to go, which would be all the way back down to that support line, right? If this market's going to go bearish, we should anticipate it to go and do exactly what the market has done over the course of the past years of movement, is go back down and touch that blue line. Well, we draw our trend line once again. You can see this market's going down, so as long as the market stays below that downtrend line, it'll continue to go in our direction, trading to the south. But here's the thing. When you start to trade these markets and you trade them aggressively, you're going to find out that there are going to be opportunities that you want to buy in the market, you want to sell in the market, but that's going to be too expensive for you. Because there's two types of accounts that the Forex market utilize. Okay? There are a standard trading account where you trade one standard lot, which is where every pip you capture. Now, pips are located on the right-hand side here, the price action. For every pip the market moves, or price interest point, that's $10 profit that you're making. $10 per pip. That's a standard lot position. We also have what's called a mini lot position. Now, in a mini lot position, that's where the market provides you a $1 per pip movement. And now, the reality of this is you're going to find out what type of trader you are based off of, first of all, what type of account size you have. How many of you have the means to invest $2,000 in the market right now? Type in the word yes if you have the means to invest $2,000 in the market. If you have the means to invest $2,000 in the market, you could be trading $10 per pip. If you do not have the means to invest $2,000, then to invest in the market and make $1 per pip is just a small $200 investment in the market. Type in the word me if you can and have the means to invest $200 in the market. Either way, you can see that if you have $200 to invest in the market, you can trade mini lots or multiples of them. If you have $2,000 to invest in the market, you can trade standard lots or multiples of them as well, $10 per pip. There's a difference, obviously, in the amount of profit you make per pip, but at the end of the day, the skill is the same, and you're trading the same way a multi-millionaire trader would trade. The only difference is you have a smaller account size than they do, right? So now that we've gotten that out of the way, we need to understand, number one, overall market direction. Well, we've gone ahead and determined that this market has U-turned at a resistance line and has begun to fall. So the overall direction is down. So we're looking to sell. Now, let me know, was that painful or was that pretty simplistic so far? Are you with me so far? Okay. Now, since we're looking to sell, okay, now what we're going to do is we're going to take this information and we're going to go to our smaller time frames looking for trades that we can afford to take on, right? Now, here's the cool thing about these charts, folks. Watch this. You might say, well, how do I know how to do this? Because I see 4 different charts and I don't know how to trade this or what to do here. Watch this, everybody. I'm going to take the analysis that I did right here on the weekly time frame. This resistance line, that support line, if this is the target that we're trading towards, then I want that displayed on every chart that I have with this currency. So I'm going to right-click on either the resistance or support, either one, right-click on it, and hit the word link. Once I do that, that brings the line on every chart's moving forward. There it is. There's my resistance line on the daily, 240, and also here on the 60. And then the support line, you can see the support line all the way down here in the daily. So you have a target to go after as you trade. Now let's open up the daily. Now I'm introducing you here to what's called the Fibonacci numbers. How many of you have heard of the Fibonacci numbers with a golden ratio? This is one of the most important things any trader will ever learn because it is easy to understand, easy to execute, and easy to obey, and it will open up a world that you may not have ever thought is possible as a trader. We see that, yes, off of that market movement that we analyzed here on the weekly time frame, that yes, the market is falling. The overall direction is down. We're looking to sell. So now we're going to open up that daily time frame, and we can see clear as day that, yes, the market is falling. So we are looking to sell based off of the wave movements. Now, does everybody see how this market does not move in straight lines, but rather it moves in waves? It waves up, it waves down, it waves up, it waves down, it waves up, it waves down, it waves up, it waves down. Does everybody see the waves of the market? Let me know that you're with me, because this is life-altering, okay? I do not want you to take this lightly. This has changed the lives of thousands of people, and I cannot say enough about what I'm about to share with you here. So what I'm going to be doing here is showing you how this works. All you have to do is understand that for every wave the market provides you, that's nothing more, okay? Nothing more than an A, B, C to D wave movement. Can everybody see how the market moved here in an A, B, C to D? Do you see that? A, B, C, D wave movement? Once the A, B, C, Ds fulfill themselves, they repeat all over again. The C becomes the A. The D becomes the B. And watch this. The market gives us a new C to D. Hence, the market moves in A, B, C, D waves. Do you see it now? Is it starting to come? Is it starting to be a little bit brighter for you now as far as the wave movements of the market? Same thing happens when the market's going up. It moves in up A, B, C, Ds. But let's take this again from the top. A and B. How do we know how to trade this? Well, folks, take a look at this. The reason we know how to take advantage of this is actually quite simple. Because what happens here is that this market, when it gives us the A-B boundary, we spread what's called a Fibonacci tool that you'll have on your charts, okay, from A to B. And then now all we're doing is we're looking for that C pullback. That C pullback is what's going to help our traders identify the entry into the market. Now, do you want to see how we identify the entry into the market based off of these Fibonacci's? Yes or no? And you'll learn a plethora of that tonight in the free presentation. But here's how this works, folks. Okay? This market moves in waves. We have our A, we have our B. Let me zoom in so you can see this. Does everybody see how this market has red levels, 382, 50, 618, blue and green levels, 786 and 86%? Everybody see that? Wherever this market decides to U-turn at, if it U-turns before or at any one of these red levels, this red Fibonacci extension level is going to be our D extension. That's going to be where we exit our trade. If this market goes to the blue and U-turns, then our exit is going to be the blue Fibonacci extension. And if it goes to the green levels, then our exit's going to be looking to go towards the D extension. Does that make sense, everybody? Market moves in waves, right? Now, as we continue to show you how this works, there's an 80% winning strategy I want to share with you right now. That 80% winning strategy is called a counter trendline break. Now, here's how I utilize it and how you can utilize it as well. Do you agree that when this market was going up, before it started to come down, this was the last recent up move here to the north, before the market started to come down? Yes or no? Watch how simple this is. This will give you an advantage on roughly 99.9% of the Forex traders that are going to be attending the web presentation tonight, that are brand new, that are excited and looking to have a future built with MTI to train them. And as you can see here, this market went up, okay, before it broke the trend line here, okay, right there. Before it broke the trend line, that was the angle this market was going up before it broke. All you have to do now is every time the market's going to wave, take that same angle and place it across the candles. When the markets break that angle to the south, that's your sell. Did we break that trend line there to the south, yes or no? Yes, right? So your job now is to simply put, look to sell here, And since we U-turned before the red levels, anything before or at the red levels, our exit is going to be at the red Fibonacci level. That's going to be our D extension. Let's see what this market does. 1, 2. In 2 days' time, this market provides you a 123 pip move. Now, just so you guys know, 123 pips is a $1,230 profit trading one standard lot in 3 days. Would you be okay making $1,200 in 3 days based off of this simple strategy? Okay. Now, we're not done yet. Okay, the market fulfilled its wave movement of A, B, C, D. Now what do we do? Watch how I do this. This market pulls back and gives us the low that we're looking for because the C becomes the new A, the D becomes the new B, and the process repeats itself all over again. Now we're going to spread our Fibonacci's again from the new A to the new B. Watch how easy this is, folks. But how do we know where to get in? Remember I told you an 80% winning strategy? Take that same counter trend line and place it across the lows of those candles. When the market gives you that trend line break, then as the directors in Hollywood say, action, right? Watch this. Did we break that trend line there? Yes or no? Yes, we did, right? So this is where you would look to sell the market right here. If we U-turned before the 382 and red levels, then that means our D extension will also be the red 1.618 levels. Okay, because that means that this is the C pullback, this is the D extension. Let's see how much we can make on this trade. There's 1, 2, 3, 4, 5. In 5 days, we fulfilled our trade in 5 days. In 5 days, we were able to generate 78 pips on this trade. Now, 78 pips with one standard lot is a profit of $780. Would you be okay 5 days later on only one currency? There's several currencies to choose from. Would you be okay making $780 after 5 days and all you did was press sell, which took you about 15 seconds to do? Especially with being a professional market analyst, which in turn is going to help you become a professional Forex trader. I mean, this is something here that is going to help you excel like never before. In this market, folks, there's a saying. There is no neutral state. You're either living or you're dying in this market. And if you're not living, that means you're dying. And we need to turn that ship around and give you a beacon of light to trade towards. Let's see what this market does here. There's your low. Now we have a new C becomes the A. D becomes the B. And the process repeats itself all over again, folks. We spread the Fibonacci tools from the new A to the new B. Well, how do I know where to get in, Jose? Watch, take that same trend line, put it across the lows of the candles, right? And now you're waiting for the market to break that trend line. Now, do you see how the market's going up? And if you would have been in the market, it would have gone against you until there. That's the confirmation. The market has broken the trend line. Do you see the confirmation telling you, hey, it's time, baby. It's time to get in. Practice proper equity management. Have your strategy ready. And look to lock and load as this market has just given you a red 382. So your exit to this trade is going to be at the red 618 extension. We're looking to sell here right now because of the fact this market broke the trend line and exit here. Now, let me ask you something, folks. From what I've shown you so far, is that painful or is this starting to make sense? Is this starting to make sense? Is this painless? I think too many times people start to focus on the negative versus the positive. Yes, there's risk involved in every market, but that's because you're uneducated on things, right? Now, Jonathan says, which time frame can be used to determine the overall trend? Is it weekly or monthly? Well, at the end of the day, both of those time frames are going to be fantastic, but if you want more here and now results for the overall trend, I'd go with weekly, Jonathan, because monthly is going to be one candle per month, and it's going to take a while to determine whether that month is going to be bullish or bearish. But on a weekly, you can get more of a gist on what's going on. I'd go with the weekly time frame to give you the overall direction, and then go trickle on down to the lower time frames after that. But you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. In 14 days, did this market fulfill our target? Yes or no? In 14 days, 2 weeks. Yes, right? In 2 weeks, this market gave us 98 pips on this trade. That's a cool $980 profit on that trade, ladies and gentlemen. Again, so far with this strategy, we've had 3 winning trades in a row. Fantastic, right? Now we wait for the market to give us the low of 2 to the left and 2 to the right, which we'll learn. Look how much further this thing has gone here. I mean, it is pretty incredible here. Here we have a low of 162.79. That's not a low. Kept on going. And here's the pullback. 2 to the left and 1, 2 to the right. So now, look at this. Our strategies will teach you to lock in profit where you could have taken advantage of this entire move as well. For an additional, you could have an additional 467 pips of profit. That's an additional $4,670, ladies and gentlemen, on that movement. Just saying. But the C becomes the A right here. The D becomes the B. And now the process repeats itself all over again because now we're below that resistance line we talked about. And now, since we're looking to head down towards that support target, let's just spread our Fibonacci's again and have fun trading this market, right? A to B. Where do we get in? Well, take that same counter trend line angle and place it across the lows. Have we broken this angle yet now? Yes or no? Clay says, what was your original investment again? If you invest $2,000 in the market, then you're able to control $10 per pip. If you invest $200 in the market, then you're able to control $1 per pip. Okay? Haven't broken it, haven't broken it, haven't broken it. Let's see where we're at here. Right there. Have we broken that trend line right there? Yes or no? Yes, right? So another opportunity here to sell the market, meaning this is our C. We U-turn at the 618 red level. That means our exit for this trade is looking to hit the exit down here at the red 1.618D extension. And let's see what this market has done. This is where we currently are at. Yes or no, would we be positive on this trade from our entry? Would we be positive? Yes or no? Would we be in the money, as they say? Absolutely, Carl. This Fibonacci method works for every market. As long as a chart is allowing you the opportunity to spread the Fibonacci ratio, the Fibonacci numbers, you are able to utilize it just like that. Works for any chart. A chart is a chart is a chart. So not only will you become a professional Forex trader, but now you'll be able to also have confidence in diversifying your portfolio. One of the things that I get from people who join MTI a lot is that when they trade other markets, not that the other markets are bad. Obviously, a lot of people make money and they lose money, right? But the one big common denominator that I get is that they have people trading for them, and they don't get the answers as to why they're losing money in the market. Whenever their investments start to lose, they're not getting a clear and concise answer. Someone's beating around the bush. Now, you won't have to worry about that. Now, we train you to do what the professionals do. In turn, you are the professional. And you learn how to control your future, how to take advantage of this market before it tries to take advantage of you. Look, this market moves in waves. It waves down, it waves up, it waves down, it waves up. Have we struck our target yet here, ladies and gentlemen? Yes or no? Have we fulfilled our target? No, not yet, right? Now, when we sold this market, we would immediately be up within the next 1, 2, 3, 4, 5 days, $2,720. The market has waved back up, where we would be up right now 96 pips or $960. How much profit do we have to still go on this trade? For this market to fulfill, that's still... Can everybody type in what this number is up here when it says range? Can everybody just type that into the questions box, please, so I know you're seeing this? What number is that? Thank you, Clay and Dale. Yes, 485. 485 pip setup is what I'm showing you right now. That means if you traded $10 per pip, an investment of $2,000 could generate you a $4,850 potential return setup here. $4,850 on this trade right now, if this was to go. Now, some of you might say, well, do we get in right now? Well, let me take it and simplify it for you. I think if you want things to be easy, then you have to understand there are rules to follow, right? How many of you understand that if you're a rule follower as opposed to a rule breaker, things will come to you a little bit easier and with less consequences? Yes or no? Because what price are you going to pay right now to have the financial freedom you want tomorrow? What type of investment are you making right now in your future so that in the future you can bask in life, not struggle through it? We can get in here knowing the market is going to fall from this C to D, but if you're conservative and you want to wait this out, look, take that same trend line, place it right here across, and now you can wait for the market to break that trend line, and when it breaks that trend line, then you have your entry to go down towards that target. You may not have 485 pips. You may have 300 pips to go after that, but is it okay? Would you be willing to make $3,000 in the trade instead of $4,800 to be a little bit more safer about your setup, to be a little bit more higher percentage successful trading ratio on your setup, so that you don't get caught up in the emotions of trading, but you get caught up in the technical side, which is the, yes, this market's going to do this because it's telling me it's going to do this, 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 and I'm prepared to do just that, and I'm now adding wood to my fire so I can keep it burning. Now, James says, how do you determine when to buy? Okay, now this is not a stock, this is a currency chart. That's a great question. Does everybody want to see how I would determine if it's time to buy this currency as opposed to sell it? How many of you want to see that? Okay, let me show you that. Now, our analysis has told us that we're looking to go from the resistance lines here all the way to support, resistance to support, but in between there are times where you could buy, right? You could buy this and make a profit. As the market's going down overall, there are times when the market yanks back and you can buy it. Here's how you do it, folks. I've shown you a profit of $1,200, almost $1,000, almost a $4,800 pip movement. That, you know, that's you wouldn't be here if this didn't work. You know this works. This is a no-brainer. But let me show you what I would do here as far as waiting for a buy opportunity here. If you look to buy the market, here's how this works. Have you ever heard of the saying, the trend is your friend until it bends? Have you ever heard of that? Okay, this market's going down. So what we're going to do is draw our trend line just like this. From the highest point, place it across the highs of the candles, and you can hit extend, and look, now it extends. As long as this market, as long as this chart stays below that blue line, I am selling at every opportunity that I get. I am selling on every strategy that I am being taught with Market Traders Institute. I am selling with equity management that I can afford. I am selling so much and with so much confidence because that's the market direction, and now I know why the market's doing what it's doing. I know where to get in, where to get out for profit, and why, and how to protect myself. If this market is to break this line to the north, okay, then this market moves in waves. If it breaks this trend line to the north, then you would look for a low of 2 to the left and 2 to the right. And when it breaks that line, look for a high of 2 to the left and 2 to the right. And what you're going to do is then spread your Fibonacci's from that A to that B. Why? Because this market moves in waves. And if it's going to break the trend line, more than likely it will fall back down to test the backside, or find a Fibonacci retracement, and when it rallies, you'll know exactly where to exit your trade. Does that make sense, everybody? Type in a Y or a yes if that makes sense. The Fibonacci's will pave the way for you and your Forex trading success. And the reality is, ladies and gentlemen, it's as easy to understand, as easy to execute, and as easy to obey as your ABCs that you were taught in grade school. Now, I know this could be familiar for some of you, and I know this is brand new for most of you. But I promise you this. Education, our education at MTI, tends to instill confidence and reduce fear in every trader we come across. Knowing that there is a return on investment. Preservation of capital is going to be #1 rule for you, but knowing there's a return on investment available to you as an MTI student, doesn't that diminish your fear even more? And ladies and gentlemen, that's it for me here today. I told you I'd share with you a little bit about what we do. And now, if it's going to be, as they say, it's up to me. So it is up to you. Ladies and gentlemen, it's been my pleasure. I'll send it back over to Reed. But this is Jose Tormos. This is FX MVP. Have a great day, everybody.